हाय एवरीवन एंड वेलकम टू 5 पैसा। आई एम स्टेसी परेरा और आज हम बात करने जा रहे हैं एसटी की रिटेल इन्वेस्टमेंट एडवाइजरी आर्म जो कि गुल्लक के नाम से जाना जाता है। उनके क्या ऑफरिंग्स है, इन्वेस्टमेंट स्ट्रैटेजी क्या फॉलो कर रहे हैं, व्हाट इज देयर ग्रोथ आउटलुक, ये सभी बातें डिस्कस करने के लिए लेट मी वेलकम ऑन बोर्ड Vivek Sharma. He's the head of marketing as well as investment at Gulaq. Such a pleasure to have you with us, Vivek. Let's start off with exactly गुल्लक जो कि रिटेल इन्वेस्टमेंट एडवाइजरी आर्म है एसटी एडवाइजर्स के द्वारा, which has been more in the quantitative fund management landscape so far, at least for the past 15 years. Could you then go on to explain and tell us what Gulak is all about and why has ST gone into, उनकी जो philosophy है, how they're now looking at retail investors also, and what they really actually stand for?
So, Stacy, first of all, thank you for having me here. Uh, really looking forward to speaking to you and through you all the investors as well. So, ST as a company was founded way back in 2008, just when algo trading was being formalized in India.
Right.
And the view and the vision of ST was always to use data-driven, quantitative analysis and approach towards investing also and towards trading. Right. So we launched our first PMS way back in 2009. It has been fairly successful. But through Gulaq, what we always wanted to do was, because prior to Gulaq, we were only serving either HNIs or institutions, large institutions.
Right.
But there were a lot of friends and family who wanted our expertise, our view on managing their investments, either in stocks or mutual funds. So whole idea about ST that we use our existing capability that we have developed in ST around quantitative methods, systematic way of picking stocks and trading uh, to deliver advice to retail investors also. And that's how Gulaq was born. That was
Right.
the similar approach. We wanted to use similar approach, similar capability to serve the retail investors. So that was the whole idea and vision behind Gulaq.
Right. So, having managed institutional money for now over a decade with your quantitative investment products, what difference do you see? You've observed between retail investors that look at Gulak as well as the institutional side and those investors. So, what is the difference that you could actually point out and say, okay, good, we have a product like Gulak as well?
See, one of the difference, obviously, first I'll talk about the investors from the investors' perspective. I think one of the similarities now, and I was pretty surprised, is retail investors these days are pretty well informed. They more now. We were surprised. They understand what they are getting into, what are the risk reward characteristics of a specific strategy, and they want more details. They are very eager to what they are investing. So in that sense, they are quite similar to the institutional investors. However, one thing that is the difference is in terms of their patience. At least from 3-4 years that we have had with Gulaq, I think retail investors some of them have slightly lower patience. They have shorter time frames that they're looking at, whereas more HNIs and institutions look at slightly longer time frames when they invest. But apart from that, there are a lot more similarities than differences between any type of investor. Be it the psychological biases that everyone goes through as humans, that is the same with institutional investors also and retail investors as well.
Right. So you're saying that there are more similarities compared to differences, and of course,
That's
markets
the experience we
tend
have
to
had. Yeah.
work in that kind of environment where either if there is FOMO, then you have retail investors also who are like, okay, I want a piece of that pie.
Yeah,
But
and
when it comes,
these things
yeah.
even institutional investors go through definitely.
True. So when it comes to portfolio building के लिए आपका क्या approach रहता है? And could you describe for our viewers if they're looking at whether it's different for especially retail investors compared to the HNIs, and what goes into that portfolio building exercise for you?
So, Stacy, at the end of the day, our approach, our methodology is fairly same when we manage funds either for retail or institutions, which is factor-based investing, in which we try and pick multiple factors that could impact a stock price or a sector price. And we also try and determine the macro regime we are in.
Hmm.
And using the macro regime, we try and pick which factors are more likely to work in current market regime. So
Okay.
typically, just for if you take a simple example, what typically does happen is factors like momentum and growth work really well. In
Mm-hmm.
sideways to downways market, factors like value, where we pick undervalued stocks or low vol, those are the kind of
Mm-hmm.
factors that work well. So broader methodology is exactly the same.
Okay.
However, for HNIs, because we are operating under the PMS structure,
Hmm.
we have fair bit of flexibility in constructing the portfolio because we have minimum 50 lakhs of investment in that.
Okay.
Whereas for retail, we wanted to construct portfolios where they can start with much smaller capital. Like for
Mm-hmm.
Gulaq, Gear 6, that capital is 25,000 rupees.
Okay.
So investors can actually get started with much smaller capital. And
Right.
that's why we had to construct a portfolio which is much smaller in size.
Okay.
So in terms of concentration, Gulaq Gear 6 or the Gulaq portfolios, which are meant for retail investors, they are much more concentrated just
Mm-hmm.
because we had to offer something at a lower ticket size. Otherwise,
Okay.
broader methodology is fairly same.
Right. So you're saying portfolio construction ka approach is pretty similar, but for the HNI or institutional investors, whereas for Gulak's portfolios, is there something specific, or are you looking at just from the smaller or small cap funds, or just a bigger mix?
It's not small cap or mid cap. We take
Hmm.
the approach is fairly simple, but in PMS, it's a much more diversified portfolio because we have to invest 50 lakhs.
Right.
Whereas here, our average AUM is about somewhere between 2 to 3 lakhs. So it's a
Right.
much smaller portfolio. We cannot offer a much diversified portfolio when you are starting with these smaller capitals. So that's the only difference. Otherwise, in terms of diversification between, say, large, mid, and small, that composition is fairly same. Again, both portfolios are market cap agnostic and sector
Mm-hmm.
agnostic. So the
Right.
broader methodology remains exactly the same.
Right. Now let's talk about the products that are there. What you'll have. You'll recently launched three new Gulak portfolios, which is the Gulak large cap, Gulak mid cap, as well as Gulak small cap. Now
Yeah.
markets though have been kind of on a down run, we would say, for the past few months. Today as well, it was kind of bloodbath on the Lal Street, we could say. But ऐसे times में, how did you think of coming up with these new products, and especially what is the reason behind launching them now?
Yeah. So, Stacy, we have been offering our Gulla gear portfolios for more than about closer to 4 years now, right?
Okay.
And we have a lot of experienced investors who wanted more control and more flexibility on their portfolios,
Hmm.
right? And they wanted this kind of advice. So these portfolios of large, mid, and small cap is actually meant for someone who want to take a view specific to market cap. Whether at this point of time, maybe he just wants to be in large cap and stay away from mid and small cap, or someone who has a view that, let's say, small caps have now corrected and it's reasonable valuations right now and they want to enter. So if somebody wants to take that kind of view, they have that kind of view, then
Option.
they can take it through these portfolios. But having said that, for most of the other investors who wants a hands-off approach, are the flexi cap Gulak portfolios is the way to
Okay.
go.
Okay. So you have that offering with the flexi cap as well. But okay, let's get into more details about these funds. You have introduced, these are market cap based, we could say, these portfolios, but you also offer them in two different categories, that is gear based as well as market cap based. क्या
Yeah.
हमारे व्यूअर्स या ऑडियंस के लिए आप बता सकते हैं व्हाट इज द डिफरेंस हियर एंड डिटेल्स इनके बारे में?
Yeah. So our actual methodology is around gear based. So about is, let's say you are going somewhere and you're taken a highway, you are driving, right? if the weather is all clear, if the roads are wide and there's less traffic, you would want to go at a higher speed. So in that case, you are going at a higher gear. Versus, let's
Okay.
say, another scenario where there's a lot of traffic, and let's say there's a lot of fog also, and there's no clear visibility. In that
Mm-hmm.
case, you would want to drive at a much slower pace, right?
Okay.
So gear-based methodology is quite similar in the sense that how much risk you want to take with your
Okay.
portfolios, whether you want to be super aggressive, which means have much more of equity,
Mm-hmm.
which has the higher gears, versus if you want to play it safe, then you would want to have more of debt in your portfolio, right?
Okay.
So gear
Okay.
6 has 100% equity in it. Gear 5 has 20% debt and 80% equity.
Okay.
And we keep reducing equity by 20% and adding debt. So what is happening is the portfolios are becoming much more safer as you go down from gear 6 to gear 1. That's what happens.
Understood.
And typically, that's what we advise also, that aggressive investors should pick between gear 5 and gear 6. The
Mm-hmm.
moderate risk profile investors. So it's dependent on the risk you want to take, your risk profiling, right?
Right.
So if you want to take moderate risk, then gear 3 and gear 4. If you want to still take lower risk, it could be gear 2 as well.
Understood. So the gears are based on your risk reward, or how much your appetite, rather, I would say your risk appetite is where the gears or the numbers you need to be aware of. But now, if you're talking about gear based as well as
Right,
market cap
exactly.
portfolios, you're following a similar investment methodology when it comes to both. But does that mean now, say for example, I'm looking at a gear 6 portfolio and a small cap portfolio, would they then contain the same stocks or would they be different?
They would be slightly different.
Okay.
Let me explain why. So our broader methodology again remains exactly the same, whether it is gear 6 portfolio, which is 100% equity based flexi
Hmm.
cap fund,
Hmm.
or whether it is large, mid, or small cap market based portfolio. So the
Okay.
methodology is same, which is multi-factor approach. However, what we have seen in our experience, looking at the data, there are certain factors that work well for, say, large cap, versus there are certain factors which work well for small cap. So there's a small
Right.
difference. So what
Hmm.
we are doing is, when we rebalance our portfolios at the start of every month, we look at the macro regime. Now, macro regime tells us that how much of weight I should allocate to each of these factors, right? So that weighing methodology between these factors is slightly different for market cap based portfolios versus a flexi cap portfolio, which is gear 6. So
Okay.
the difference is only in the kind of weights that I am giving to, say, momentum or size or
Hmm.
value, that would differ. Otherwise, broader methodology would remain the same. So there could be a difference in which I might be either in the weights or also in the stocks, name of these stocks that we have
Right.
between gear based portfolios and market cap based portfolios.
Right. So the way of picking and choosing would have just a slight bit of difference. And like you mentioned, the lower gears, you're adding more debt
Yeah,
and reducing the
yeah.
equity. Now, since you've already given us that kind of understanding, based on this risk return profile of all of these portfolios, so I'm right now, just correct me if I'm wrong, 6 gear based and 3 market cap based. That's right. Or 4 gear based and 3 market cap based. राइट एंड इसके रिस्क
Right.
रिटर्न के मामले में आप इन्हें कैसे रैंक करेंगे एंड कैसे बता सकते हैं दैट विच टाइप ऑफ इन्वेस्टर शुड चूज या कौन सा पोर्टफोलियो वुड सूट देम बेटर?
राइट। तो एक तो रिस्क रिटर्न के कैरेक्टरिस्टिक्स में गियर बेस्ड पोर्टफोलियोज हैं कि अगर आपको ज्यादा रिस्क लेना है तो आप हायर गियर के पोर्टफोलियो सेलेक्ट करेंगे, लेट्स से गियर 5,
करेक्ट।
गियर 6। या फिर आपको कम रिस्क लेना है तो आप लोअर रिस्क के पोर्टफोलियोज, लेट्स से गियर 4 सेलेक्ट करेंगे। और जो 100% इक्विटी वाले पोर्टफोलियो विच इज गियर 6 और मार्केट कैप, दीज 4 पोर्टफोलियोज,
राइट। ओके।
अब उसमें भी एज वी ऑल नो कि लार्ज कैप्स आर द सेफेस्ट वंस, राइट? तो लार्ज कैप में हमारा एक्सपेक्टेड रिटर्न भी ऑब्वियसली थोड़ा सा लो रहेगा, बट दैट इज मच मोर सेफर। देन
राइट।
कम्स mid caps and also the flexi cap, because flexi cap is somewhere in the middle. Flexi cap has about equal allocation to large, mid and small, Obviously, that also keeps varying, but over long term, it has roughly similar kind of allocation to large, mid, and small. So in
Okay.
between, you have either a mid cap portfolio or this flexi cap, and
Hmm.
the highest risk in terms of volatility, if you see, it will be in the small cap
Small.
portfolio,
Hmm.
right?
Right.
Obviously, if you are taking highest risk, the expected returns are also slightly higher. But if you consider the risk adjusted returns,
Hmm.
okay, one is if you're just talking about risk and returns separately. But if you
Correct.
combine these two and if you look at the risk adjusted returns, then you get the best risk adjusted returns in a flexi cap portfolio, which is for us a gear 6 portfolio.
Right. Right. So your ranking is saying that large caps, then you have the flexi and mid caps, and then you have the small cap in terms of at least risk, if you have to give them a ranking in that way.
Yeah. Yeah.
Chaliye, okay, let's switch little focus now and talk about quantitative investments. That's the style that y'all have followed with HC advisories, at least for the longest time. And that has gained quite a bit of significant traction, we can say, at least in the recent past, in India specifically.
Yeah.
What do you believe is driving this transformation? या ये shift हमें क्यों अभी देखने को मिल रहा है? And is this going to pick up this new style of investing according to you?
Yeah. See, I might be biased because I work in the quant investing space, but I think this trend it has just started and it's going to pick up. So if you look at numbers from US, huge amount, in fact, majority of the funds are now being managed systematically. So that trend is very, very clear in US, and what we have seen in India also now, the trend is very clear across last 2 3 years, because we see lot of RIAs like us launching these quant based portfolios, but
Yeah.
also not only these, but also I think almost every mutual fund wants to launch portfolios in this space. So I think
Right.
it has just started. There are certainly some advantages in quant based investing, and the biggest one is for investors or for fund managers also is we are not relying on our feelings, on our biases, right? So it's a very, very rule based systematic approach, which helps us pick the right stocks, right? So you're not never bothered about your emotions.
Hmm.
Either as a fund manager, also you go through all the similar kind of emotions that a retail investor, institutional investor
True.
goes through. So you can keep those aside and look at all the data that is available very, very objectively. And secondly, now you have so much of data that it's very hard for humans to analyze
Hmm.
tons of data that is coming in at such a high frequency. So
True.
almost on a daily basis, you get huge amounts of data. And if you have team of analysts who is analyzing that data, for them to make sense out of it will take much more longer.
Hmm.
What we are doing is we are looking at the similar data, but we can analyze that data in very small amount of time using the algorithms that we have,
Yeah. Yeah.
right? So we are able to use the huge amount of data that is available right now to make these decisions at a much faster pace. So definitely I feel in the current market dynamics, the way competition is structured right now, where still most of the people, most of the AUM is still being managed by discretionary funds.
Hmm.
I feel this space definitely has a lot of opportunities in the near future, at least for the next couple of years, till the time competition heats up.
Right. Now, for a layman, if you could just explain what are the advantages of, this systematic or quant-based approach in investing, and how does that, what does that give you compared to the traditional styles of investing? If somebody who doesn't know the difference, how would you explain it to them?
So again, see, broadly we are doing same stuff only, right? Let's say जैसे डिस्क्रिशनरी फंड मैनेजर्स होते हैं उनकी भी अलग अलग स्टाइल्स होती हैं,
Hmm.
राइट? कुछ डिस्क्रिशनरी फंड मैनेजर्स होते हैं जो बहुत ही बीटन डाउन, जो बहुत ही अंडरवैल्यूड स्टॉक्स हैं उन्हें पिक
Yeah.
करते हैं, राइट?
Hmm.
तो देन हम जो फैक्टर इन्वेस्टिंग में बोलते हैं कि दे आर यूजिंग वैल्यू एज अ फैक्टर टू पिक स्टॉक्स,
Hmm.
राइट? तो वो एक फंड मैनेजर का स्टाइल है कि ही इज एबल टू आइडेंटिफाई अंडरवैल्यूड स्टॉक्स एंड इन्वेस्ट इन. किसी और मैनेजर का स्टाइल हो सकता है क्वालिटी, जहां पे वो बहुत ही हाई क्वालिटी कंपनीज पिक करते हैं. नॉट दे आर नॉट नेसेसरली अंडरवैल्यूड कंपनीज, so they should be fairly priced, but they are very high quality. Now quality can be different for me or to other fund manager also, but
Correct.
essentially they're using a high quality company to pick to construct the portfolio. तो हम इसको क्वालिटी फैक्टर बोलते हैं. तो इन दैट सेंस हम कुछ ज्यादा अलग नहीं कर रहे हैं
Hmm.
ना. हम भी लो लो ये अंडर प्राइस्ड कंपनीज पिक करते हैं, हम भी क्वालिटी कंपनीज पिक करते हैं और इनके बेसिस पे हम सिलेक्ट करते हैं. बट
Right.
हम एक लेयर इसके ऊपर जा पाते हैं, जिसमें हम क्या कर रहे हैं कि हमने ये जो 4-5 फैक्टर्स जो अभी मैंने बोले, जैसे मोमेंटम, क्वालिटी, वैल्यू,
Value.
इन सबको क्लब कर पाते हैं. ठीक
Okay.
है, हम इन सबको क्लब करके देखते हैं कि कुछ स्टॉक्स हैं जो करंट मार्केट रजीम में, क्योंकि कभी क्वालिटी वर्क करता है, कभी अच्छी क्वालिटी की कंपनीज ज्यादा रिटर्न्स देती हैं, किसी अदर कुछ और टाइम में हो सकता है कि अंडर वैल्यूड कंपनी ज्यादा अच्छा परफॉर्म करे. तो मार्केट रेजीम्स में, अलग अलग मार्केट रेजीम्स में अलग अलग टाइप की अप्रोचेस वर्क करती हैं, और हम वही काम, बट हमने इस पूरे को रूल बेस्ड बना लिया. तो हमने
Understood.
कुछ फैक्टर्स पिक किए और हमने बोला कि अभी की मार्केट में अंडर वैल्यूड कंपनीज में ज्यादा अपॉर्चुनिटीज दिख रही हैं, तो हमें वहां पे जाना है. बट कल को ये हो सकता है हम क्वालिटी में घुस जाएं या मोमेंटम में भी घुस जाएं. तो इस सेंस में हमारी अप्रोच बहुत ही फ्लेक्सिबल है, बहुत फास्ट है, कि हम मंथली बेसिस पे अपनी अप्रोच चेंज कर सकते हैं. अब जो
Understood.
एक डिस्क्रिशनरी स्टाइल है किसी एक मैनेजर का, लेट्स से दे आर वेरी गुड एट पिकिंग अंडरवैल्यूड स्टॉक्स, तो वो अंडरवैल्यूड स्टॉक्स तो बहुत अच्छे से पिक करेंगे. बट रेजीम्स में, कुछ रेजीम्स में वो काम करता है, कुछ में नहीं करता. वो ऑब्वियसली ओवर लॉन्ग रन एवरीथिंग वर्क्स इफ यू आर डूइंग इट वेल, राइट.
Right.
बट रेजीम आती है कि लो वैल्यू अंडर वैल्यूड स्टॉक्स 1-2 साल तक कुछ आपको रिटर्न्स ही नहीं देते, और फिर एकदम से, राइट. तो वो रेजीम में अलग अलग चीजें काम करती हैं, और हम उसी चीज का फायदा उठाते हैं कि जब तक लेट्स से कि अंडरवैल्यूड कंपनीज नहीं चल रही हैं, हम उसको बहुत कम वेटेज देंगे. इनफैक्ट जीरो भी वेटेज हो सकता है. और तब तक मान मोमेंटम काम कर रहा है, तो हम मोमेंटम यूज करके अपने स्टॉक्स पिक करेंगे. तो हमारी अप्रोच बहुत फ्लेक्सिबल है, and we are using all of these things, whereas a discretionary fund manager is able to do just one or two things well. So in
Right.
that sense quite different. और जैसा देखा भी गया है कि काफी रिसर्च हुई है इन टॉपिक्स पे कि कौन सी whether quantitative investing is better or discretionary, but there was one clear output from that research is कि having both strategies in your portfolio helps you in diversifying also, right? At least in terms of diversification, there's huge advantage in allocating some part of your portfolio to these quant-based
Quant based.
quant-based funds.
ठीक है. Also, what we're noticing is there has been quite a significant migration of investors from active funds towards passive index funds. Now, you coming from an active asset management industry, how do you view this? Do you look at it as a positive development? And if not, so what would you say is happening, or why are we seeing this migration as well?
I think this migration, obviously, we know why it is happening. It's happening because most of the active fund managers do underperform, right? But I think that will always happen in the investing landscape. The problem is not that really passive funds are better, because everyone, first of all, it's very very personal, right? Whether somebody wants to take completely hands-off approach and select passive funds, that's not a bad approach. That's pretty good. But if you ask me personally, I've always been trading and investing, and I've always been surrounded by people who have been able to beat the market. So I like active investing much more. However, having said that, one should really be very, very aware of what are the pros and cons of each approach. Like in active investing, you have hundreds of funds to choose from, and there's a wide variety of performance. There's a huge divergence in performance. So one of the big things is even active funds, even the good active funds do underperform the markets from time to time, and that period of underperformance also could be few quarters long also, right? So if you are an active fund manager, active investor, then you really need to understand this issue and have lots of patience. And you should not always be looking for which is the best fund right now, because that list will keep on changing,
Right.
right? But in terms of the quality of active funds versus quality of passive funds, I think investors are spoiled for choice, that they have very good pick to choose from.
Hmm.
Also, I think one of the hardest thing in active investing is, obviously, as I was telling you earlier, it's not that active fund managers don't beat the index. Some of
Mm-hmm.
them do, although it's a smaller quantity.
Yeah.
I think the bigger problem is, how do you identify those good active fund
Mhm.
managers who will be able to beat the market? I think
Right.
that is a bigger problem. I really don't have a very clear cut solution to it, but I think that
Hmm.
is the bigger problem, that how do you identify those good ones? Because definitely there are some very good active fund managers who are able to beat the market year after year, and I would want to put their money on them. But identifying exactly which are those managers is pretty hard.
Right. I think it'll just need a lot more homework, and perhaps, you'll follow how these fund managers, or what is the strategy they're using, and that can be a way to at least start. But कोई भी investment strategy foolproof नहीं हो सकती है, that everyone knows as an investor you need to take that. But quantitative investing में आपने कौन से बड़े challenges देखे हैं, especially in a market like India, where many smaller stocks are subject to manipulation, as well as we've seen issues of corporate governance also
Hmm.
come up here and there. So how do you make that, you know, how do you be specific on, this is the kind of stocks we are taking into our portfolio, and how does quantitative investing help in doing so, and the challenges that you could have faced?
Yeah. So in this, see, there are two kinds of challenges. One is related to the data that we use, because these quantitative strategies need a lot of historical data, where we try to figure out what are the patterns that have worked in the past and use those patterns. So what is definitely required is a very good quality of data, historical data, and the more it is, the better it is. Now, that is one thing that we are really was challenging, that in India, good quality data on large, mid, and small caps is only available for last 10 years or so, right? Whereas if you go to a market like US, where good quality data is available for multiple decades. So
Hmm.
that is one definitely big problem for anyone wanting to start doing quant. Another problem is about backtesting. When you try to backtest, now
Hmm.
it's very easy for you to figure out what has worked in the past, what kind of patterns. But the tougher thing is to answer the question that whether these same patterns are going to work in the future or
Yeah.
not,
Hmm.
right? So there are certain nuances in backtesting that a new quantitative researcher who is researching these strategies would find it hard to adapt. I think
Hmm.
that is the biggest thing, that whenever somebody is launching a new fund, they would have backtested the data and would have found very good returns. But whereas in the live market, you are unable to
Not at all.
replicate those in the live market in your live performance. I think that is one big challenge. So only someone who has experience designing these kind of strategies would be able to do it well. Otherwise, you will have that learning curve where you keep learning, you keep
Hmm.
making mistakes and keep learning, right? But somebody with experience would be able to do it well. So I think what I would say is, in this case, obviously there are a lot of quant funds being launched,
Hmm.
but to rely on someone who has a decent track record, at least
Yeah.
you should give them much more importance rather than somebody who's launching a new fund, is what I
Right.
would say. There are a lot of things that can go wrong while you are designing these quantitative strategies.
True. Vivek, let me ask you your personal approach towards investing. How do you look, and how do you build your own portfolio? If you could share, what would you consider when you get into, okay, I have an X amount of money and I want to invest today. How do you go about your personal investing journey?
So couple of things I do. One is I more or less remain systematic, in the sense these SIPs, systematic investing is a very good thing. So what I do is definitely use SIPs and avoid I avoid timing the markets,
Right.
that whether that currently markets are undervalued or overvalued. That is one thing, and I on a monthly basis I keep investing, right?
Okay.
Uh, that is one thing I follow. Second is most of my money is into flexi cap space only, flexi cap or
Mm.
multi cap space. I
Okay.
personally don't take calls on the market or on sectors also.
Okay.
I take a view on the broader market and I just keep investing. And the thing that helps me most is my longer term view. So I am investing in the markets for next 10 years, right? So these falls of 5-10% that keep happening, and even now we are going through one such fall, they don't
Right.
unnerve me because I don't want that money right now. I don't need to take it out. And I'm
Mm-hmm.
looking at 10 years down the line, where I know that 10 years down the line, markets will be way, way higher than what currently they are. And
Right.
that's why these small drawdowns in my portfolios really don't bother me as much. So
As
these are
much.
I try to keep things very, very simple.
Right.
And most of my money is obviously invested in the funds being managed by ST.
Right.
Uh, yeah, those are the simple rules that I follow
Right. So
in my
long
personal.
term, keep a long term horizon. SIPs is the easiest and nicest way to go about, and keep keep that risk appetite as well, so that you know that these drawdowns you will be able to over time you'll be able to make up. I know you just mentioned that you don't
And
look
the
at
last one is following a flexi cap approach,
right,
uh,
right. Like you
and
just
not
mentioned that
going
you
after those specific trends or
makes sense.
themes.
Yes. You just said that you don't look at any sector specifically, but if I have to ask you from, in the next 3 to 5 years, which do you think are going to be the biggest investment opportunities? In which sectors would you want to, pinpoint to actually look and see that, this is something that we should tap for the next 3 to 5 years?
Okay, so here I don't think you'll get a direct answer from me because I am from the quant investing background. What we do is we don't try to predict uh, the trends, rather
Mm,
than follow. So we follow, and whatever our quant strategies are telling us, that is what we try and doing. So it's very hard for me to pinpoint a specific stock or a sector that this specific stock or sector will be in my portfolio and I want to bet on it, right?
mm-hmm.
Because these themes also keep on changing, right?
Right.
So accordingly, the algorithms that we have designed pick up the stock. So we never predict, we always adapt and follow. And that
Okay.
is why it's very hard for me. We're not into that prediction business. It's very hard for me to take a call on a specific stock or a sector. But what I do know is because I'm following this systematic approach through ST's funds,
Mm-hmm.
what I'm pretty sure is that I'm going to adapt. My strategies are going to adapt, even though I made a wrong call 1 or 2 months. But we
Right.
adapt. The algorithms adapt, and pick up the allocation in those specific sectors where it is finding most opportunities. So
Right.
no clear cut answer from me. That's
All
what
right.
I do follow. Yeah, that's
Fine.
the
So we're
approach
not
I
gonna
follow.
get any specific sector, but we know that's all good mix is part of the portfolio. At least that because it is data driven, we can expect those changes also to happen quite often, like you were mentioning. Now, talking about Gulaq specifically, it has delivered quite an impressive returns, at least in the past. However, we're looking that the fund size is also growing, and many strategies in this case, when you're growing, they tend to underperform or perhaps sometimes even fail when they're trying to match the previous performance. ऐसे में आपकी strategy कितनी scalable है at this point?
So Stacy, in that sense, I think we are just getting started. अभी गुल्लक ऑल्दो हमें काफी सक्सेस मिला है और काफी सब्सक्राइबर्स मिले हैं, बट हैविंग सेड दैट वी आर स्टिल एट अ वेरी वेरी स्मॉल स्केल राइट नाउ. तो
Hmm.
अभी मेरे को ये जो स्केल का जो चैलेंज है, विच यू आर राइट, विच हैपेंस इन थाउजेंड्स ऑफ करोड़ व्हेन यू रीच दैट काइंड ऑफ स्केल, बट
Right.
करंटली हम अभी उसके आसपास भी नहीं. अभी हम उस स्केल से काफी दूर हैं जिस स्केल पे हमारे रिटर्न्स इम्पैक्ट होना स्टार्ट हो जाए. तो आई
Hmm.
थिंक वो वाला चैलेंज एटलीस्ट अभी अगले 2-3 साल के लिए तो मैं डेफिनेटली नहीं देखता हूँ. If we
Okay.
keep growing the way we are growing, then maybe in 3 4 5 years down the line we'll have that kind of problems that come with scale. But अभी तो हम काफी छोटे ही हैं कि ये वाली
Okay.
प्रॉब्लम्स हमें इम्पैक्ट ना करें, एटलीस्ट फॉर नाउ.
Right. So there's the bigger, more chance to grow, and then perhaps adapt, like you said. So that will at least help it in the volatility, or negate the volatility. Now there are also many factor-based funds. If I have to give an example, the Nifty Smart Beta indices. These kind of have emerged at least in the recent past. They do show some promising returns, we could say, but they also exhibit high cyclicality. ना ऐसे में आप कैसे इंश्योर करते हैं कि इन फैक्टर मॉडल्स में कंसिस्टेंट रहने के लिए व्हाट इज द अप्रोच दैट यू टेक स्पेशली व्हेन इट कम्स टू दीज फैक्टर बेस्ड फंड्स?
तो स्टेसी, इसी में हमारा जो मैक्रो रिजीम है ना, मैक्रो रिजीम जो हम प्रेडिक्ट करते हैं, दैट्स वेयर इट कम्स इनटू प्ले, राइट? क्योंकि कोई भी एक फैक्टर कंसिस्टेंटली नहीं चलता है. वो कुछ टाइम के लिए चलता है, फिर उसका भी खराब फेज आता है, फिर वो अच्छे रिटर्न्स इतने अच्छे नहीं देते और फिर से आता है. तो वो साइक्लिकल नेचर है, वो सारे ही फैक्टर्स में वो काम करता है. और इसीलिए दो बहुत इंपॉर्टेंट है. एक तो इंपॉर्टेंट ये हो जाता है कि वेदर इट इज म्यूचुअल फंड्स और फंड्स लाइक आर्स, इट्स ऑलवेज बेटर नॉट टू रिलाई ऑन वन फैक्टर, राइट? तो सिंगल फैक्टर फंड्स भी काफी आ गए हैं, नॉट टू रिलाई ऑन देम, क्योंकि उसमें साइक्लिसिटी काफी ज्यादा रहती है. rather go for these मल्टी फैक्टर फंड्स, जो कि एक फैक्टर को यूज करके पिक नहीं करते बल्कि मल्टीपल फैक्टर्स यूज करते हैं, तो आप हेज्ड रहते हैं. सेकंड इज, इफ यू आर एबल टू डिटरमाइन कि कौन सा फैक्टर कब काम करेगा, तो हमारा ये जो मैक्रो रेजीम के बारे में जो मैं बार बार बात कर रहा हूँ, एग्जैक्टली हम वही चीज करते हैं कि हम मैक्रो फैक्टर्स भी यूज करते हैं. तो इट्स नॉट ओनली कंपनी और सेक्टर स्पेसिफिक फैक्टर्स, हमने कुछ मैक्रो फैक्टर्स भी आइडेंटिफाई किए हैं. तो मैक्रो फैक्टर्स कैसे हो जाते हैं कि जो ओवरऑल इकोनॉमीज जो लार्ज स्केल पे इम्पैक्ट डालते हैं, लेट्स से कि प्राइसेस ऑफ एसेंशियल कमोडिटीज और इंटरेस्ट रेट्स और इन्फ्लेशन और जीडीपी ग्रोथ रेट्स, दीज आर मैक्रो थीम्स, राइट? तो हम ये लोकल और ग्लोबल मैक्रो थीम्स देखते हैं और उसके बेसिस पे हम आइडेंटिफाई करते हैं कि अभी कौन सा फैक्टर काम करेगा, राइट? और अकॉर्डिंगली हम उन्हीं फैक्टर्स को वेट देते हैं, ज्यादा इंपॉर्टेंस देते हैं. तो इसीलिए हम कभी भी हमेशा इन्वेस्टेड नहीं रहते हैं सारे फैक्टर्स में, हम उनको वेरी करते रहते हैं मंथ ऑन मंथ, डिपेंडेंट ऑन दीज मैक्रो रेजीम्स. आई थिंक दैट इज वेयर वी आर एबल टू ऐड अ लॉट ऑफ वैल्यू, क्योंकि अगर हम सब में ही इक्वली भी इन्वेस्टेड रहेंगे तो शायद इतना अच्छा परफॉर्मेंस नहीं आएगा. अब हम उनके वेट्स वेरी करते रहते हैं क्योंकि मार्केट की रिजीम्स भी चेंज होती रहती हैं, तो हम वो अल्फा क्रिएट. आई थिंक दैट इज वन डिफरेंशिएटिंग फैक्टर where we are able to add huge amount of value.
Right. I think we're getting some queries that are coming in also at this point, saying that we are seeing this kind of turmoil between the small and mid cap SMA. Is it still a good time to be investing in these kind of funds? What would you have to answer, Ved, who's asking this question?
Okay, so I think we're very clear that any new money should definitely not go into these market cap based funds. I think the best now is go the flexi cap way. That is obviously the best approach. But if you see the longer term valuations also, I feel only in mid caps these are now very high, whereas small caps it's not exactly equal. It's not really long term average, but slightly higher than that, and large caps are below their long term valuations, right? So I think the only problem is if somebody is investing purely into mid cap space, then it might be a problem. It might be a problem only in the near future. So if somebody has a longer term view, then clearly we say don't look at valuations so much,
right?
But if somebody has shorter term view, then they might be in trouble. That is one thing. And second thing is, if you have a flexi cap, if you're investing in a flexi cap fund, that is always better because it gives the fund manager that flexibility to move around between these market cap allocation. So that always helps. Yeah.
Right. So in the immediate term, at least you're saying don't look at these market cap based ones for now, or perhaps
No.
prefer a flexi cap at this
Yeah,
point.
prefer a
Okay.
flexi cap. I think problem is primarily in the mid cap space right now.
Mm.
Large caps are definitely at very attractive valuations below their long term averages. So large cap is definitely very attractive right now, and small cap has also corrected. So
Right.
it's still higher than their long term average, but you can never know how much lower they'll go. So I think it's decent time to maybe get started even in small cap space. Only thing is,
Right.
I think mid cap space is one thing, and the problem is more with the index, because
Mm.
these indices are definitely at higher level, even mid
Correct.
cap. But if you talk to me, are there no opportunities in mid cap? I do not believe so. There are
Correct.
definitely many mid cap companies which are now very attractively valued right now. So I
Right.
think
So
they
it's more to
definitely,
do with cherry picking even within that space that you
yes,
could see
yes,
opportunity as well. There's
yeah.
another query from Mohit Trivedi, and he's asking, do we have any lock-in period? I'm assuming this is for the portfolios that you all
Gulaq
have at
portfolio.
Good Luck. Yeah.
Yeah. So for Gulaq, we do not have any lock-in in the portfolio. But
Mm.
having said that, what we recommend is, because these are all equity-based portfolios, so these are definitely not meant for short term. So
Right.
if you have 1 or 2 quarters view, I think at least 1 to 2 years is bare minimum. The longer it is, the better it will be for you. But no exit load or lock-in as such.
Okay. The next one is Tanushri Torat. She wants to know what is the rebalance frequency and how often do you all do this? Because you said it is quant based. Is there, do you
Yeah.
all have a very flexible way of rebalance, or do you all do an approach once a month? How does it work?
Yeah, so again, here we have taken whatever we have decided, it's clearly based on the historical data. So we
Hmm.
have tested what's the best approach related to rebalancing, whether it is weekly, monthly, or quarterly, or
Hmm.
have a much more flexible approach as and when required. And what we have
Okay.
seen in our data is the approach that works best is the monthly rebalancing approach
Hmm.
that really works well as compared to quarterly approaches. So we do rebalance our portfolios once every month.
Right. So a monthly approach is what you'll take, so you can see stocks, either exit or be added into the portfolio on a monthly basis. That's quite
Yeah.
interesting to see, because I think that's a good enough time frame also to look at stock performance and for you all to get data on how to be judging them. So that's quite interesting. Well, Vivek, it's been quite an interesting chat with you. We've got to understand exactly how Gulaq and what it's putting out in terms of its products and the portfolios, how they function, and what is the approach you are taking. And quite interestingly, different from what ST has been doing all this while. And now you'll have something for the retail investors. So it's nice to know, and for our viewers as well, if this is something or they thought this was a way to be looking at getting. Getting to be part of ST advisors, and they have a product now for retail investors as well through Gulaq. So all the best for what you'll have putting out there, and hopefully this was an informative session for all of our viewers, and they got to understand what exactly this new retail advisory arm by SC Advisors really is all about. Thank you so much, Vivek, for your time and for helping us with all of our queries as well.
Thank you, Stacey. My pleasure.
Right. Thank you, viewers. And for more such updates, keep coming back to 5paisa.com.